Why venture capital? Sunil Mittal at Bharti Airtel was hosting a board meeting at Belvedere in Oberoi's, and an opportunity to sit with him with a very, very attractive offer. We were trying to raise $200 million that day, and the kind of pricing and how attractive we made, by the evening we had $500 million in commitment. While we were rejoicing, delighting that happening for the private equity industry, for me, that was a sad moment. Not a single penny was made by the Indians. All the money left Indian shows.
Most surprising outcome from Fund 1. It could be good or bad.
When we were talking about the fundraise, 27 crores came on the last day. You have to be persistent. You cannot let the ball drop. We were at it for a good part of 3.5 years, from the setting of the fund, to the final close of the fund. And we couldn't have said, yeah, we've done what we've done and we could have moved on. And that would probably have been suboptimal. So the fact that, our business is cyclical and it is not easy to raise money, you have to be persistent.
Hi, everyone. Welcome to another episode of Omega Talks. So as you know, we've evolved the format. We came up with the Omega Files 1 and 2, but we've had the privilege of also having our peer funds contribute to it. And we thought, while we've sort of double-clicked on a lot of the Blume storytelling, it would be interesting to see that our peers from that era also, on what their funds were doing and what their founders were doing. And while we can't do as much justice to their data beyond 3-4 slides, we have the people behind those stories, and we want to bring those stories alive to you today. So today, thanks again, Sunil, Goyal, and Girish, Shivani, co-founders of YourNest VC. As you can see from the deck, performance has been amazing. They continue to build. At first met Sunil all the way back in Mumbai Angels and Indian Angel Network. I think even before I left the Times Group, and Sunil left Airtel, so he was still an executive there. And so we go back more than 15 years. So it's also wonderful for me to recount some of those early combined struggles and journeys. So why don't I hand over the mic to both of you and contextualize, not a general introduction. I think a lot of people know YourNest, but maybe the emotion behind Girish and Sunil, welcome again. And maybe why don't you walk us through how your partnership fructified? People, even small, younger managers today, decide on why to start a fund, who to partner with. And so maybe that should be the starting point. And then if you can weave in memorable stories from those early years and early days on how and why you thought a venture fund was the need of the hour, that will be great. Over to you. Thanks again.
Very well, Karthik. Those were the beautiful days of 2010, being part of angel networks and learning what opportunities are coming by in India. And here you are. I want to formally compliment you for both Omega Files and now Omega Talks. Omega Files have touched a new milestone in terms of transparency for the entire industry and sector to learn from each other. So thanks for this. Now, why venture capital? This was 2001, May. Sunil Mittal at Bharti Airtel was hosting a board meeting at Belvedere in Oberoi's, and an opportunity to sit with him. And he invited them with a very, very attractive offer. We were trying to raise $200 million that day, and the kind of pricing and how attractive we made, by the evening we had $500 million in commitment. With that, Warburg had total investment of $300 million. So it was a delight for those days to have that kind of money coming in. And within period of next 4 years, Warburg happened to not only add value to YourNest, to Airtel, but happened to walk away with nearly 5 to 6x on their investment. So the Indian industry, Indian sector did well, Indian entrepreneur did well. While we were rejoicing, delighting that happening for the private equity industry, for me, that was a sad moment. Not a single penny was made by the Indians, all the money left Indian shows. Hence, sometimes in 2008-9, I would have gone to my executive coach and mentor, Sanjay Pandey, and mentioned to him, such big, large opportunity of being with the startups at an early age. Uh, One can create value. This was just a good, general talk with that you have with your executive coach. By then, Airtel was already $50 billion. Okay, and I was sitting on 25x on my own personal investment, and reached out to Sanjay. Sanjay, this is a lifetime opportunity, and if you can be part of this particular journey because it's all about people. He just thought it over. We were looking for some triggers, and the trigger obviously was the Angel Network in 2010. And by 2010, I think September, October, I received your pitch deck. So that was another thing that people, like-minded people, are thinking about it. So that's how this was born from a background point of view. Girish, would you like to add about the opportunity side?
Yeah, so all three of us had been associated with Airtel at some point in time as employees, partners, vendors, etc. And as Sunil said, we'd seen how wealth had been created on the telecom side of the world. And 2010-11 were, as you might know, early days of mobile internet in the country. 3G was just starting to come in, and there was enough, empirical evidence that with advent of mobile internet, a largish opportunity on the wealth creation side could exist, as it had existed 10 years ago on the telecom side. And one way to play that opportunity was to continue in our cushy jobs, put a few $100,000 every year in early stage startups. And the other way to do it was, get our skin in the game, raise money from a few like-minded people, and start a fund. I remember, this was May, June 2011. Sunil had just come back from his last stint in Africa, and we were having a conversation at Select City Walk, but it just opened up in the month of June, sitting in the corridor and trying to figure out if this was the right thing to do. Sunil and Sanjay had already signed up. I was evaluating it, and when three of us sat there for an hour, we ended up spending 3.5 hours, shook hands, and YourNest was born. It was just one and done.
I must add here for the founders. Three of us locked ourselves for a day in the room to put down our founder agreement. Today we are 3, and tomorrow if you're going to be 1,000 partners, how the partnership will work. If Music can work with thousands of partners and KPMGs and others can work, that's the structure that we put together within a day and then came out of that room. Because
I need to compare notes with you. We still struggle with that quest as we keep growing.
One of my mentors, Akhil Gupta from Bharti Airtel, had always said, you can enter a room only when you can see an exit door out there. So the exit clauses have to be very well discussed even amongst partnerships before you get into the partnership.
So I was going to anyway go down that path and ask what were core principles or philosophies that guided you, and you went straight to like the jugular, which is around how venture funds can be built long term. But beyond venture funds per se, I mean, the fund of course is an interesting construct to study, but like as you know, our audiences are predominantly young micromanagers VCs now who are trying to emulate us, and they would love to hear more on that, and we'll come back to that if we can. But from a technology perspective, were there any core principles or philosophies that guided you when you started YourNest?
Yeah, so as I said, the early stage of mobile internet, the thesis being that you could use mobile internet as a very effective, go-to-market strategy, whether it was B2C, B2B2C, or B2B. So the first fund that we conceptually, we said we will do tech and tech-enabled opportunities. And this was essentially on back of, what had happened in other parts of the world, how mobile internet had changed the way, business was being conducted, Uber had to come in the valley, Airbnb was up and about. There were a lot of other opportunities that were happening there, which had straight replication back into the Indian ecosystem. And these were all basically tech-enabled in that sense, because without that mobile internet piece coming through, some of this stuff would not have happened. So the first fund was purely focused on tech and tech-enabled opportunity. We ended up doing B2B, B2C, B2B2C opportunities. So there was no focusing, we will only do consumer or only do enterprise. But as long as it was an amalgamation of using mobile internet as a core technology, we were happy to look at it.
Now, before we dive into like the real pivotal stuff and the challenges and the learnings from that fund one, why don't one of you summarize the fundraising journey and and like what it took to get that fund one up? What is the quantum of it, and till what period did it last you when you started in 2000? When you shook hands in 2011 to the last dollar, people are still in a primary position out of fund one.
Yeah.
Last dollar came in by June of 2015.
Holy cow. Okay. You're still raising, you're saying, at that point. Or would be employing?
No, we're still raising. The final close happened on 30th June 2015. And on that one day, we ended up raising 27 crores out of the 90 crore that we raised in that fund.
Man,
On that one day.
what gritty
Yeah.
persistence piece of that era.
The original target was 60 crores, and on March of 2012, we started with some 18 crores of corpus. And this happened. I was having a drink with one of the veteran venture capitalist advisor who used to take the IVCA classes for all of us at that time. And he said, Sunil, why are you waiting? Why didn't you start investing with 18 crores? Why are you dragging your first close? I said, the corpus is too small. He says, no. Even Morgan Stanley's and Goldman Sachs, they've started with very, very small corpuses. So start investing, start demonstrating what kind of companies you're picking up, and the money will follow. And then it was the story of persistence, the way you had written a blog of going house to house with your friends, staying at a friend's places, staying at a relative's places. We had a similar journey with minimal of money, minimal stuff. And you can't be broken if you're getting rejections time after time. You must have pitched to 1,000 people all across between our ecosystem of tech entrepreneurs or tech companies. Yeah, it took, we got ultimately 140 of them to subscribe.
Awesome. That's even longer slog than I had to go through. But kudos to your grit. Yeah. Girish, you're saying something now.
The reason we had to be, you were still from the venture capital industry to an extent. Three of us were novice, yeah. We were learning, we were naive. None of us had any venture capital exposure. At the most, we had Warburg Pincus and other private equity experience in Bharti Airtel. Beyond that, it was just the angel investing experience. So, yeah, we were starting raw.
We were first-time fund manager, boss. The first 35 investors who gave us 18 crores were people who we knew on a first-name basis. And, we thought that if we were able to raise in 5-6 months, we were able to raise 18 crores, 90 crores, 60 plus 40, वैसे ही कर लेंगे. And by the time we ended up, we were, one third more gray in our hair.
Happens to the best of us. Yeah, mine is hidden, but I'm balding too now. Eventually it all catches up. Yeah. Okay. So can you any specific challenges that and how you navigated them? I mean, I'm more interested in the entrepreneurial stories of our own fund lives in some sense as well. And similarly, the other one could be, what is a very pivotal moment or a key decision in that fund one journey that shaped where YourNest is even today in the verge of 2025?
When we were at the fag end of the deployment cycle in fund one, by that time, the new government had already come in. There was a lot of push on Make in India, Startup India, Digital India, etc. And we had a founder who had come to us, about 6 months before we did the final close of the fund, with a very interesting concept of building a hardware which was going to make analog watches smart. But it was too early for us. We didn't understand hardware, etc. But this guy was supremely persistent. So he went back from a design, the next time when he came back to us, he actually had a working prototype and he had a signed contract with a large, manufacturer of watches in the country. And he was ex Nokia, etc. had come from hardware background. And that's how we kind of started our hardware journey. And we realized that there was so much more potential on the product side of the world than the services side of the world way back in 2015-16. that when we were starting to conceptualizing the second fund, we said that, that fund should therefore, be supremely product focused. And that's how that entire, evolution into a deep tech fund happened.
Fascinating. So, yeah, one great story can change your perspective so dramatically that I was wondering, I was going to obviously get to that because today you're known to be more someone who chases innovation, deep tech, and is essentially trying to build world-beating products from here. And that didn't sound like the starting point in Levin. So I was wondering where the transformation took place. And thanks for sharing that critical story. And similarly, as you've evolved today to a much, much larger fund, goes back to the first question, challenges or learnings that shaped you from that era.
Challenges or learnings. So let me talk about some learnings out there. First, obviously, was the emphasis that I can give the role that was played by Warburg for Sunil Bharti Mitra. That actually has shaped our thinking all through. Sunil Bharti Mittal in 2001 only had the aspiration to become a telecom leader in North India. And there comes Warburg Pincus with that $300 million check and says, we have scouted all sectors all across the world. We have chosen telecom. We have seen all entrepreneurs in India, and we believe that you are the best. And since you are the best, now your aspiration and vision has to be mega. You cannot be thinking incrementally. And that role that an investor like us can play, because we have a better worldview and we have the conviction, we have put in our money in that particular point of view, does make a difference to the life of the founder. And hence we said we should be able to add value there. The second learning, I was a lead angel for representing some around 15 angels as part of my role. And I was on the board of company. There were 3 new founders. And I was traveling, flying down for the board meetings every now and then, every quarter. In one board meeting, after coming back from one board meeting, I said, the energy levels were a little low. And for the next 3 months, the level of responses from the founders were meek kind of stuff. I happened to next time fly down a day prior and set up a meeting with each of the founders for one dinner, one lunch, one breakfast, and got to know they are not talking to each other.
A lot of pandemonium in the house.
Oh my God, they're not talking to each other. The stuff was such that they could have shut down because of that thing persisting for 3 months. And imagine that just by opening that dialogue between 3 of them, within the next 2 weeks, I gave them a 1 week to settle down their thing because I found a route and I happened to describe the route, and they agreed. In 2 weeks' time, they did it. And the returns for us were mega 10x. Okay, for us, the angels.
Small interventions.
Small intervention, but being aware. So it was always about people building confidence, building trust. So that's the learning that we've been able to live at.
No, it's a great lesson, and I would want to double click on it primarily because a lot of, I think the younger VCs today starting in, there are 2 schools of, narrative which are, I think, flawed, right? One is it's about getting into the hot deals, giving money, giving them, being founder friendly means like, you let them be, and people don't realize that if the founder has to have reasons to trust you with information sharing when times are bad, not when just the MIS is good, right? And the only way to inculcate that is by being more connected with the founders, not simply lining up for like one-off board meetings, etc. So everybody has their own style, and I'm not advocating yours or ours to everybody else, but I think it's important for everyone to develop it. The second is more crazy actually, because the philosophy that, the best founders figure it out themselves and therefore the value add is hocus pocus is, in my opinion, BS, because even the best founders need coaches, they need somebody to talk to, they need sounding boards. And it's a very lonely journey, even if they're sometimes 2 or 3 founders, because, of these kind of situations, they're not able to really, have a neutral arbiter in the room. And if you've earned that status, you could be game changing. And, by the way, you brought up an example. There are enough examples of where we've counseled one person out and then the company has thrived. If you look at the data that Aditya and me mined in Omega, we actually have a situation where more of the founders, when they left, the company has done better. The co-founders leaving because you had to resolve a problem. It's like saying, just because two people divorce, they can never thrive in life as a partner to somebody else. Of course they can, right? And so there are enough examples of that in something as sacred as marriage. Why would it be any less possible in something like a business marriage? So it's fantastic learning. So thanks for sharing those. And you already spoke about a little bit about how your portfolio selection in terms of what sectors you wanted to focus on evolved because of that crazy story, Girish. But how about your investment style and strategies? As your fund grows, how do you inform yourself on how you need to evolve on portfolio construction and ticket sizes, ownership, any of those thoughts that changed in your heads?
First, we always were writing significant checks, even at the pre-series A stage itself. The big change that happened between Fund 1 to now is there was some kind of emphasis on owning certain percentage of the company. If you're owning minimum 15, 20, 25%, then only we'll get a pound of flesh, etc. That has changed dramatically. Now, that ownership percentage is meaningless. It is now about having a seat on the board for a promising founder. If his journey is going to be great, if you have a seat on the board, then you can keep on enhancing your depth of investment. On one, I know we had only 8 cents to a dollar, 80 cents to a dollar invested. Now we have around 2.5 cents to a dollar. So dry powder as a change. So that's a significant change. There is another which we learned over the past few years. We had to go out of the way and say that our subsequent funds can actually write checks in the earlier companies. And that is normally a conflict of interest situation. And we have to go to our LP board, convince them that this is the thing that is going to be adding much more value. Hence, please allow us to allocate 20 to 30% of our capital for us to do preemptive rights in the winners of the earlier companies. No, so I think that was a significant structural change that we had to lead at YourNest.
That was very early and prescient. We of course, we tried it in Fund 3 and then we didn't get enough capital to have the courage to do the crossover investing. And therefore, we raised opportunity funds, which again create their own set of conflicts. So there's never a perfect answer. So finally, in the next fund that we raise, we're actually asking our LPAC to bless the crossover piece. And now that we have a size which is above 200 million, I think both them and us are comfortable about keeping us at 15-20% for that. So I think it's an evolution. I agree with you. If you've done so much hard work on building out a handful of winners in every vintage, it's foolish to let all that hard work and that goodwill and that effort on seeing another 5-bagger from here just be sort of a dumb additional allocation from a large investor. I mean, it's not like we're betting the house. We just want a few more $1 billion to ride on that best story. If you're not selling a single dollar from your old position, why aren't you playing more?
No, since we are talking about the audience is going to be the GPs or the budding GPs, I must talk about another very big value add, because I said we were novice in this particular system. On our advisory board, we had people like Alok Mittal from Canon Partners, one turnaround specialist, one thinker, one first generation entrepreneur. And these people were able to give us inputs or words of wisdom on many aspects. And particularly one was time diversification. We made 3 investments in Fund 1 within 6 months of its formation. And then comes the advice from Alok Mittal. Sorry, your job is to offer diversification every scale. And time diversification is another important aspect that you need to be offering to them. So don't be in a hurry of investing.
No, all things we learn by making mistakes. So
Yeah.
idea, as you said, is to make as few mistakes as possible. Not to get me wrong, not to state something incorrectly. I think entrepreneurs like what we're putting out in Omega, etc. But I feel it doesn't necessarily change the way they operate their own businesses. But the reason we push them to also learn about our businesses, capital is a big source of, the sort of growth push that they need. They have to understand capital providers. They can't simply operate in a halo of, in a vacuum of, I don't need to know what my VCs are up to, right? You have to understand who we are, what our challenges are, how much additional capital we have, what difference between a B and an A and a seed investor is. So I think we've come a long way from when we all started 13, 14 years ago, but still there's a long way to go. So the job of these talks is also to sort of educate them. Most surprising outcome from Fund 1, it could be good or bad. The most surprising outcome you would say is what? And how did it, how did it sort of, what did it teach? What is the lesson it taught you about early stage investing? I know you've mentioned a few stories.
So as I said, when we were talking about the fundraise, 27 crores came on the last day. You have to be persistent. You cannot let the ball drop. We were at it for a good part of 3.5 years, from the setting of the fund, to the final close of the fund. And we couldn't have said, yeah, we've done what we've done and we could have moved on. And that would probably have been suboptimal. So the fact that, our business is cyclical and it is not easy to raise money, you have to be persistent. You cannot just, say, itna ho gaya to theek hai. There is a target you have in mind. There's a fund construct you have in mind. You have to ensure that you deliver.
And then any lessons from the investments? And I'm actually was going to ask you the other question, but I want both. Any from the investments you made, and any lessons from, the most often, the most reflective thing that we go through as managers, the anti-portfolio. Why did you miss a deal? Yeah. And sometimes it's simply because we were very small and we didn't have the money. I know both of us went through that. But like a proper anti-portfolio where you thought this won't make it and you passed, and what does it teach you later? And you say like, shit, how did I miss that after seeing it as well?
Let me share the from a portfolio stories. Girish, you can come for the anti-portfolio. On the portfolio side, we were investors in Uniphore in March 2014, a conversational AI platform. And Umesh were an exceptional person to be able to build a product. And board meeting after board meeting, we used to see that the product stories are strong, customer stories are strong. When you look at attrition rates, they were just not there in place. Every time we had high attrition out there. Now, one thing was, he's a smart guy that he will be able to learn on his own. I watched for 2 board meetings, and the 3rd board meeting, I sat with him one-on-one. And I said, Umesh, you're a great product leader. Have you thought through of doing town halls with your people, connecting with your people? It was stepping away from his comfort zone. And the guy did beautifully. Today, Uniphore is one of the finest people-oriented, people-run company. And let me tell you, Karthik, that small intervention appreciated by Ravi and Umesh at Uniphore, we made our 16x on our first check, 4x on the second check. So a great outcome.
Fantastic. No, lovely example. And great cross-border story, deep tech story. So I'm glad you shared that. Girish, anything on the anti-portfolio?
No. I'll share 2 more on very quickly on the.
Oh, quick, yes. Go ahead, please. Stories always.
Companies, the founders came to us that they want to shut it down. 1 founder, 2 founders flew from Bangalore. Other 3 founders came to us from Delhi that we want to cut down our businesses because of this reason, etc., etc. It's easy. Only aspect we have to tell was, what was our thesis of investing in you? They stayed on. One contributed to 0.3 DPI, maybe 4.5x. Another contributed to survive through the pandemic, and we were able to sell in pandemic. So it's just that, we were able to get that conviction from our own point of view for them to stay in the business.
Yeah. No, I think yeah, young founders, guiding them to like these kind of outcomes and be, just motivating them sometimes to continue is also amazing. We are seeing stories break out after 8-10 years in Fund One. The fact, I say there's a miracle thing, right? They could have given up at any point in time and said, Karthik, you've given us inspiration, but like we really don't care. We've done enough of this. But somehow they pull through. So many stories of resilience. I'm sure every cycle will produce them, but I think that generation was like really exceptional. The 2000.
Yeah, so I think on the on these two examples also, it was very stark that when we explained to them that was for us it is only about money, correct? But you put in collectively 10 years of your life between the two of you, or 15 years between the three of you to bring this here. And we are saying that this is a good opportunity and we have supported you. Why would you want to hang up your boots and walk away? And all five of them created some serious wealth for themselves. So it's just about getting people to understand a different outside in perspective and work with it. On the anti portfolio, so you, as you would have it, your anti portfolio is 10 times your portfolio, right? In terms of the number of opportunities. But the two stark ones that come to mind, one was a company that inventors, Parag sent to us from an investment perspective, and we looked at it. The great founder, second time founder, etc. But we realized that it was just too pricey for us to look at it at point in time at the stage at which they were. So we walked away from it. And the second one was a very interesting story. So I don't think in the last 12 years of our existence, all three of us, me, Sunil and Sanjay, have been in the office on a Friday evening. One of us will definitely not be there. And this was a founder who was flying in from Bangalore, and we all three of us were waiting for him to come to see us, and we liked what he was doing. And he lost his bags while landing in from Bangalore. So we were waiting till 6:30, and then we went away, and then a few days later, we realized he raised some, $1.5 million from Indian Angel Network and some other, and went out to like get it out of the park. So he said,
"Do you get the name? That was not a strange secret. I'm okay with both." Yeah.
Yeah. So the first one was Power to SME, and Parag had sent it to us, and the second one was Loginext.
Interesting. Yeah, interesting. See, both those companies have. I haven't tracked Power to SME. I've heard good things, but I haven't tracked. Loginext, something went through its ups and downs. So. You never know. You never know till the end state what is really great at. Right?
There is one lesson, two lessons. Even Oyo, Ritesh had come to us in the Oracle days. Actually, we should have maintained a touch with him in such manner that when he pivoted, he should have called us.
Yeah,
so that's the learning that.
Same here. We passed on him as Oracle, but he became something else later.
Yeah, that's something else. Then he didn't call us. Second, Ola. Ola was acquiring one of our companies, and I should have accepted the offer. We should have accepted the offer because we were not becoming number one. We just were riding on the regulatory waves out there. We learned the.
Yeah, I always for that company. I met the founder in recent place. Yeah, booked my cab. So, can you share an instance of where like a portfolio success or failure changed your belief about a certain sector? Like, did you say, this sector doesn't work, or, I know you talked about the deep tech example, but or the approach to your investing style. I know I'm trying to just extract more examples. I know you've given me a lot today.
So I'll go. So this was the first company we invested from the first fund. So you know how the first company from the first fund is like very close to your heart, correct? And they were doing some very interesting work in audience measurement for the out of home industry, and they were using very interesting camera-based technologies to measure and monitor out-of-home spends, etc. Share of voice, share of wallet, and all the good things. And every other medium, advertising medium at that point in time was measured, whether it was TV, radio, internet, etc. Out-of-home was the only one which was not measured and audited. So we thought it was a great opportunity, and we looked at a couple of opportunities globally as well, and how they had scaled, and we thought this could become really nice, really big, and we went in with that conviction, and then we realized that when there is a friction in the ecosystem with respect to what you're offering versus what the buyer is looking for, it becomes very difficult to scale. And here we were trying to sell to advertising agencies and brand managers, etc. And we just couldn't move the needle. So I think the greatest learning was, however deep your conviction is, you have to understand how the ecosystem is, is built out. And without that knowledge, no product company can succeed. So understanding of the ecosystem, the competition, and the drivers of the buying decision, make or break an opportunity. So
there's a good reason a lot of us don't do too many things which are entirely dependent on Indian enterprise decision makers. It's a learning that you learn from those early days, that's a painfully slow cycle. Painfully.
And let me add two quick ones. One is, Miko Sneh Vaswani came and presented to us in 2018, 10-year product roadmap. And that changed our conviction that the product companies and somebody who can think through how AI will change, how singularity will come in, how things will come in, and basis that the product roadmap is clearly defined was a good example. Exponent on a PPT, saying that they will be able to do 15-minute rapid recharge of electric vehicle battery and showcasing a path of a business model around it. So one was a product roadmap. Here, product roadmap was there, but in addition, there was a complete commercial sense of how a business model will be made. So those things, gave us the confidence we can keep on investing in product companies in India.
Awesome. Great stories, and it defines, it explains what defines YourNest today. And so I'm glad you're sharing these. Last thing on learnings, changes, challenges, moments from Fund 1, founder qualities. Like, what has surprised you in terms of saying, hey, you have a certain perception on what kind of founder will build a great firm for you, and were there things which were overlooked, things which now you double click, triple click on? Again, any lessons to share with the wider ecosystem?
I think in the initial years, we knew, first of all, that any founder, if he's building a business, he's going to be in a very competitive world. The challenges will be very, very high. The assessment of ours was largely around the capabilities on 0 to 1. The capabilities were that, yes, the rest of the things, we should be able to mentor and coach. Now, you touched upon coachability. That coachability aspect of it was not paid that much of attention, while we were all about nurture capital. We were all about nurturing these startups with all kinds of inputs that we can provide to them. That thesis kept on evolving now. Now it's not about even 1 to 10. Now, after the pandemic, it has become 10 to 100. Yeah. And the founder, the 2017 was, can they build a global level company? Now it is about, can they handle a large, very complex operations of a large company and having a potential to be listed? So it's just the dimensions have changed step by step of which is the founder that you want to partner. I think we continue to evolve.
And I think you've kind of already answered the next questions are obviously, how does all of this experience, we are evolving as entrepreneurs ourselves, right? And I think how we make these decisions, you give a lot of stellar examples on how these perspectives inevitably have to shift if you really want to build a grand set of outcomes with a fund size which is not 90 crores anymore, but like 90 million, right? And so you're looking at, a massively, larger fund, 10 times the size, to be able to make this happen. Then all of these perspectives have to shift, much like we demand that of our founders. And you touched upon, definitely how founder behavior has needed to shift for them to become venture backable, at least YourNest backable.
Yeah.
What are the values or priorities other than founder selection, sector focus? Anything else that has changed from your Fund 1 avatar to your 2025 avatar? And is that a function of how the ecosystem is forced you to change it? Or is it a choice that you're making for yourself? Any views on that?
Fundamentally, the value systems and our perspective has remained the same.
Hmm.
We used to talk about nurture capital. We used to talk about this businesses of challenge engineers, and challenge engineers are the ones, whether within the YourNest ecosystem or the founders, they should be able to see like a child.
Hmm.
They should be able to, think like a god. Think very, very big. They should be able to rule like a king. They should be able to win like a soldier. So execution, benevolence with affirmity, with thinking big and mega. Now, these were the kind of core four value systems that we started with, of defining. Whenever we had the image of our founder, it was this image of a challenge engineer that we were looking to.
I like the
partner with.
framework. I love the framework. Yeah.
Ah.
Very philosophical, but yet very real. Yeah.
It just worked. It just worked. And sometimes we used to joke that what was the joke, Girish? That can we trust the founder with our life
Life and money.
and maybe wife as well.
Right, correct. Yeah, I think the other thing that we've seen is this entire bro code being evolving within the founders ecosystem. They are more empathetic. They are more open to work with founders. In different domains. It's like an unsaid code which says, "Ki boss, if you are a founder and you want help, reach out and we will do what we can." And I've been more community oriented, more community, yes, and people are willing to give back. Second time founders, third time founders, and all that has added to the depth of the ecosystem. They are more empathetic. They are more aware. And they are happy to walk the extra mile to without reward or recognition to support a brother, as I call it.
Super.
Sure.
No, I think we've come a long way to go. I think that is a function of how many more outstanding outcomes we deliver, both at individual fund levels and as an ecosystem. Speaking of which companies or milestones, I know it's difficult to choose between children, but maybe there's one or two examples on how have they defined YourNest brand in the ecosystem. We're all eventually derivatives of our portfolio companies. So, I wish we had our own identity beyond that. Like if your portfolio doesn't make you look good, then nobody can, right? And so which ones have exemplified this is YourNest? Like, this is what YourNest means to the ecosystem.
So I'll give you an example. I'll give you that story. So we were in a founders offsite in Goa in February and early March of 2020. And on 1st of March, when we came back, my parting remarks to the group was that next time we meet, the world would have changed. Because we had companies in China with supply chains in China, we knew what was happening. Okay.
Yeah, the beginnings were there.
The writing was on the wall. Correct. And on 18th March, the world shut down, etc. And how it was, right? Public markets were crashing. Private markets, nobody was willing to write a check, etc. And we stepped back and said, boss, for us, and we were only 40% drawn in fund 2 at that point in time. So we stepped back and said, boss, this is the time to go out in the ecosystem and say, even if the world has gone for a toss, we are out there standing with our founders and willing to write checks. And we ran that rapid funding program called SOAR, okay, where we said, you write into us for 2 weeks, 1st May to 15th May, we will give you a term sheet in 4 weeks. And money was disbursed. So we ended up receiving about 1,900 plus applications, most of them deep tech products, because we could pick and choose, right? And we ended up investing in issuing 6 term sheets. One guy did not take our term sheet. One guy got acquired during that process. And we ended up investing in 4 companies, 2 of which we have now exited in less than 4 years. So that was a pivotal moment in our journey at YourNest. That put the brand right out there in front of the founders, saying, "Ki boss, when the world is shirking away from writing checks and supporting, entrepreneurs, here is a fund which is standing right next to us and writing checks and putting their money where their mouth is." And I think that played out very well for us. We actually replicated that right now. We are replicating it right now. We're doing 8 investments as we speak right now. We ran a similar program called Velocity this year. We got some 1,200 odd applications, and we are now writing 8 checks. That was a game changer for us as a deep tech fund in that sense.
One question before we move to like future looking stuff. When you think about how you've evolved as a fund, and I know you were 3, VCs who didn't have a sort of VC training in that sense. Today, the market is, rife with like VC profiles, youngsters getting opportunities in other funds, etc. How has it influenced the way you pick for your team? Like, what do you look for when you add somebody to your team today?
We were doing some maths, with the kind number of funds out there, the number of GPs, etc., and the kind of teams we have. We realized that there are less than 10,000 people who are trained to be in this ecosystem.
That seems high too. I would have guessed it's more to this 4,000. Yeah.
Maybe between 8 and 10,000, depending on if you would include other parts of the VC ecosystem, etc. Correct? Which means there is no talent. Correct? And with the kind of plethora of funds that are out there today, hiring the right people is always being a challenge and will continue to be a challenge. But having said that, the kind of stuff, for us, an empathetic, professional who may or may not understand technology, I think is a key to the nurtured philosophy that we want to espouse and practice. And therefore, and that becomes a very integral part of our selection criteria. And we don't do any hire, even if it is an analyst, till all, or at least 4 of us have not spoken to them. Because you're hiring you're hiring a future potential partner, right? At the end of the day. And why would you not? And they would take decisions of, tens of crores, writing and managing investments. So why would you not be diligent about making sure that you get the right person in? So that's been the philosophy, from a hiring perspective. Sunil, feel free to add.
And in the interest of time, I'm going to look at the future forward thing maybe a little bit differently in a more like a rapid fire format, and love to hear both of your answers. Is some of them are not firm related as much as the ecosystem related. How do you think early stage investing has changed now compared to when you started in India?
It's much more dynamic. The quality and quantity both have improved substantially. And there is clear, and the fact that the viability of the asset class today is not a question mark. When you and us started way back in 2011-12, it was very difficult to explain to an investor why he should part with his hard-earned money and invest in an asset like ours, which is illiquid, or which had no track record of returning capital.
No, we're seeing that. I mean, if you think about this, Girish, like 150 plus micro VCs, probably more than half of them are domestically supported. So it shows how far we've come. Yeah.
So that's a huge evolution in the ecosystem.
And I'll just add one aspect. When I used to go and meet international LPs, they used to wonder how deep tech will emerge as a winner out of India, while Silicon Valley and Israel are the ones who are doing the innovation. And today, I don't think we need to answer that question.
You don't give now power to deep tech. I think that's where we need to win even bigger. I know we have a lot of good starts, but I think when we get 10, 20 of them past that, milestone, whether it's $1 billion company or a few $100 million of revenue, I think that's when the world will start taking serious notice. What advice would you give new GPs starting out today? Like younger versions of ourselves who are not as gray or,
Even I got the advice that an angel, you can make much more money than being a venture capitalist. And that's true, actually. Yeah,
it's true. It's true. By the way, that question, I used to keep threatening Sanjay and Ashish about this for 5 years upwards to it. It's like, this has got to be worth a while. Otherwise, I might as well just take whatever little I've made and be like, you need to invest. And the math looks better for a 40 than versus a $40-50 million fund. You have to like really outgrow that to be able to make big money. But
This is an asset class where you have to dedicate yourself for nearly 20 to 30 years.
that's right.
We were talking about you can plant a tree and the mango tree may give fruits in the 8th or 10th year, or a bamboo will come in after 6 or 10 years. The Greece said, we are a walnut. The
Walnut tree. It takes you 18 years to fruit.
fruit.
I wasn't aware of that analogy. So, but you know the one I use a lot, right? Which is the sushi chef analogy. You got to be, you're going to take 10-15 years before you become the underlying.
Yeah. I know it's a rapid fire, but let me give an example for people. We put in $1 million in a company at a $10 million valuation, 10% equity. It goes for 2 dilutions of 20% and 25% over a period of the next 4-5 years, and gives a healthy exit of $100 million. By then, we only own 6% of the company.
Yeah.
So we will get $6 million. We've made a capital gain of $5 million. And in the best case, as GPs, we'll make 20% on that $5 million at the best case. So $1 million is what we will be making. The outcome is $100 million. So 1% of the capital, this thing is what VC will make after 6-7 years. If we
have to share amongst multiple people.
And we have to share across. And investment banker walks away with 3% for making that deal, or So
it's brutal. It's brutal. No, it's tough to play the long game unless you become very large.
Yes. All we know that we are here for not the $100 million outcome. We are here for mega opportunities. Maybe $1 million.
You covered a lot of points. This is exactly what shapes the evolution of the.
This is not a short-term cash flow play, boss.
Yeah, absolutely.
This is a long-term wealth creation. You have to be patient. The power of compounding has to kick in for you to make money, and that's how you have to play it.
If someone were to write a book on the YourNest journey, what would you hope the title or the central theme to be? If not today, 5-10 years from now.
On VC.
On VC, okay.
On VC, from whatever way that we've develop our model, we were the newbies in the industry, we were learning, we were developing our own models out there. So that's how we will see it. And I think there's a word for on as well, Girish.
Correct. Yeah, ultimate nurturance.
Okay. Very, very deeply married to your original brand name. So I love that the Josh is still there. Love it. And if you were to create and Sunil, I know you've been by my side along with a bunch of us VCs who keep pushing regulators and policymakers to keep changing the paradigm. And a few of us are more passionate than others on this front as both firms and individuals. But what do you think is missing? 1 or 2 big ideas that are still missing to make this close to, there's never something called a perfect environment, but like an even better environment for startups or VCs in India.
All the many things have happened since 2012. We started and we represented. We are delightful and thankful to the government where we have come to. There is one more aspect. We want Indian entrepreneurs to stay in India and build successful businesses from India only. And hence looking for partial capital convertibility only for the startup ecosystem. If my company raises $100 million in US, that founder is free to use that money whichever way they want to hire the talent, to import best of equipment, etc. How to make that happen? If we can make that happen in India, that will be a mega flip to the entire ecosystem. It's a big ask because rupee is depreciating continuously. In our mind, there is a lot of strength in the Indian economy, and if we start doing partial capital convertibility, it is going to be helpful for us. And so deep thoughts need to be given on that.
You saw my small dig to the Ministry of Finance and the current Omega, I hope. I said you should just let the markets be and we'll make a lot more money and capital gains by sending our money out into the best founders overseas. So I agree with you. I mean, I couldn't have said it more boldly. I don't want to take head-on pangas, but I did slip it in. That title is called Markets Over Ministries, by the way. I don't know. Small. Anyway, coming to the last one. If you weren't a venture capitalist, what would both of you be doing? What would be pursuing by now?
So I call myself an accidental VC. Sunil conned me into doing this. And no, I'm not.
I didn't tell you how long a game it is.
No, he didn't tell me. Yeah, no, but I was a technology practitioner, and I was very happy doing what I was doing, and I would be doing that. I would probably be a CIO somewhere, and an angel investor doing some investments of my own in the deep tech domain, etc. Because I've been a techie pretty much all my life, So I'm clear in my head that this is what I would be doing, and I'm sure Sanjay would also be continuing to work with people in whatever form and manner he could. He was an executive coach, leadership development guy, used to run a coaching company, etc. And I'm sure he would, and he loved it. So I'm sure he would continue to do what he was loving at that point in time. Sunil, आप बताइए.
See, philosophically, yeah, I was taught the role of an entrepreneur in 1984 when I was 17 years old. So I would have been some form or other, lived the thesis of, enabling, being catalyst for innovation and entrepreneurship. That's what I believe I would have been, or working with startups or across. However, there was if wherever there is a ability to give back or to be able to do some larger impact, one venture I had started in 2008 or thought of in 2008, maybe would have come back to that, which is the sweeping the streets of India. From a climate point of view, keeping the Indian road streets blossoming and happy.
Super. I love the energy of the entrepreneurs who are VCs, and I'm glad we have a lot more in our ecosystem now than when we started off collectively 14, 15 years ago. Gentlemen, thank you for your time, and again for being willing contributors and collaborators, not just in the ecosystem. But
no, thank you so much for giving us this opportunity to put our story out there in this form. And you guys are doing a great job of building transparency in the ecosystem, and all that will hold us in good stead, inshallah.
A lot more to come. I feel like, the underlying mission is, I've always believed this, right? I think if Indian VC has to win, a lot of us have to win. Right? It can't be one or so. I don't know, a lot of us have to win. Second, I think more than anything else, it gives a right to go and tell enough people out there in the world that we are not like, some laughable nth place VC ecosystem talent. Even 12, 13 years ago, we were doing great work. It's just that, you can blame it on the dollar rupee, or you can blame it in the additional 2 or 3 years. But just because we don't necessarily look, top decile in dollar terms in IRR doesn't mean we're not doing great work. And eventually that compounding will lead our current funds hopefully to look like, very worthy of backing. So it's a way of signaling to everyone, and then gives confidence to our founders, our ecosystem as a whole, that we're all trying our best and doing something that will make the ecosystem.
As they say, it takes a village to bring up a child.
Yeah. We're seeing that both in collectively as an ecosystem and individual companies. So it's a lot more work than people bargain for, and we need a lot more idealists and believers. So thanks for being that, and good luck to YourNest. And whenever your next fund is coming and your growth is coming. And as always, we'll be comparing notes through the journey.
Absolutely. Look forward to it.
Thank you, dear.
Thank you, Sam.
Bye-bye.
We thank IDFC First Bank for being our annual partner. IDFC First Bank is deeply engaged with the startup community in India. Their commitment to fostering innovation and supporting entrepreneurship has made them a valuable partner in the growth journey of numerous startups, including many, many Blume portfolio companies. This partnership helps us in a mission to back the next generation of revolutionary founders in India.